Morning, everyone. I'm Sandra Vanoy. I'm Acting Dean of the Walker College of Business. Welcome to the 62nd program in the Harlan E. Boyles Distinguished Lecture Series. As a result of this long-standing series, students are able to learn directly from high-level business executives, such as Mr. Minaya today. Of course, this year's event is very different due to COVID-19, but I know that each of you will learn a great deal from Mr. Jose Manaya, Chief Executive Officer of Nuveen, a TIAA company, and today's lecturer. This event is one example of how we in the Walker College of Business are able to achieve our mission to deliver transformational educational experiences that prepare and inspire students to be ethical, innovative, and engaged business leaders who positively impact our community, both locally and globally. We sincerely hope that once this pandemic ends, Mr. Minaya will join us on campus for a follow-up event. Just a few housekeeping items before we get started. If you would like to see the speaker in your screen as large as possible, find their window, hover in the top right corner, and when you see the three dots, you can click that and pin the video to maximize the Zoom screen. If you have questions for Mr. Manaya, you may send those to wcob@appstate.edu. It's now my pleasure to introduce a few additional special guests with us today. We welcome Mr. Edward Boyles, Managing Director of Wells Fargo Securities and a valued member of the Walker College Business Advisory Council. Mr. Boyles and his family have been instrumental in the Harlan E. Boyles Distinguished Lecture Series since its inception in 1988. And the series is named for Mr. Boyles' father, the late North Carolina State Treasurer, Harlan Boyles. Treasurer Boyles was a model for industry, hard work, and integrity. These are the skills required of our students to be successful in today's business world. Ms. Christy Holden, Managing Director and Head of Business Strategy and Specialist Relations at Nuveen. Ms. Holden is a 1999 Marketing and Management graduate of the Walker College. Successful and engaged alumni like Ms. Holden are the ones who are building this strong network between our students and industry. With us also today, Dr. Heather Norris, Interim Provost and Executive Vice Chancellor at Appalachian, whom I invite now to bring greetings.
Thank you, Dean Vanoy. It is my sincere pleasure to join you this morning for this virtual lecture. And thank you, students, faculty, staff, and special guests who are also attending today. As Dean Vanoy mentioned, engaging with business leaders is one way we're preparing our students for their future endeavors. Here at Appalachian, we take great pride in readying students to lead purposeful lives and shaping them into engaged, responsible, global citizens. Envisioning a just and sustainable future is something our speaker is passionate about, just as we are. And I look forward to hearing Mr. Manaya's thoughts on inclusivity in the workplace and sustainability in business. Finally, thank you, Mr. Manaya, for taking time out of your busy schedule to speak with us today. And like Sandy, I do hope and look forward to seeing you again in person on our campus when circumstances allow. Thank you so much.
Thank you, Provost Norris. Now I'd like to invite Mr. Edward Boyles to bring greetings.
Thank you, Sandy. It is awfully nice to be back for another lecture. I've enjoyed being a part of this series for some time, and thank the folks at the Walker College of Business for pulling everything together like they have today, and particularly appreciate Christy and arranging this, and Mr. Minaya being our special speaker today. So thank you all. It's always a great experience. I always learn something, and I look forward to a good session here today.
Thank you, Edward. I'll now invite Ms. Christy Holden, who works closely with Mr. Minaya as Managing Director and Head of Business Strategy and Specialist Relations at Nuveen, to introduce our featured speaker. Christy?
Thanks, Dean Benoit, and thank you for having us today. Again, I'm Christy Holden, and I'm based in Charlotte and a proud alumni of Appalachian's Walker College of Business. While I wish we could be together on campus today, I'm looking forward to hearing from many of you. Thanks to everyone who submitted questions in advance of the lecture. It helps us know what's on your mind, and several themes stood out, like sustainability and diversity and inclusion. If you don't hear your exact question today, hopefully we address it through a similar question. Additionally, if you submit a question via the email link provided at the start of the lecture and we don't get to it, we will do our best to follow up after the lecture. I am proud to introduce Jose Minaya, the CEO of Nuveen, a TIAA company. Jose was hired by TIAA in 2004 as a fixed income portfolio manager. In January of this year, he became CEO of Nuveen, one of the world's largest asset managers, managing more than $1 trillion on behalf of clients around the globe. Before becoming CEO, Jose served as Nuveen's president and chief investment officer, responsible for overseeing all investment activities covering equities, fixed income, real estate, private markets, natural resources, other alternatives, and responsible investments. He has more than 26 years of investment experience, including the AIG Global Investment Group, Merrill Lynch, and JP Morgan. Jose is a distinguished recipient of the 2016 Twigo Blazing Trails Award for his demonstrated commitment to education and leadership of the next generation of financial services talent. He is the executive sponsor of Inclusion and Diversity Initiative at TIAA, which is working to build and promote a diverse and inclusive environment throughout the enterprise. Jose holds a BS in finance from Manhattan College and was a member of Omicron Delta Epsilon, an international economics honor society, in addition to an MBA from Dartmouth College, Amos Tuck School of Business, where he was a Robert Twigo Fellow. Jose currently serves on Dartmouth Tuck School of Business MBA Council and is a board member for the Robert Twigo Foundation. I will now turn over the meeting to Jose.
Thank you, Christy, and good morning, everyone, and thank you for those introductions. I would say, Dean Benoit, I would have done without the advice on how to blow up the screen for the speaker, so I'll apologize now for all of you that have to deal with that. But I also want to thank the Walker College of Business for inviting me. It's also, look, this is a big honor for me, especially to be associated with someone like Harlan Boyles, who's known for his fiscal integrity, hard work, and honesty. I think the school's mission also stood out to me, emphasizing experimental learning, collaboration, engagement, innovation, and most importantly right now, adapting in an ever-changing world. I think it's pretty safe to say that we are currently in a ever-changing world, and I can't think of a more important characteristic that's important for society to embody going forward. I think also before we move on to the questions, I'd be remiss if I didn't acknowledge and thank ASU for being such a long-standing client of TIAA in Nuveen. Today we manage over $300 million in retirement assets on behalf of almost 2,000 staff members, faculty members, and employees across the university. And so I thank you for your trust in us and partnership. It's also one of the things that really pains me not being able to be on campus today. I will tell you, one of the joys that I have in my job is that ability to go out and be on campuses, right? Because what we do, why our firm exists, what my job is serving the needs of our participants. So, that ability of going on the campus and meeting people face to face and engaging with them really brings home my firm's 100-year-old mission. And it really kind of makes me personally feel good about what I do and what I get up in the morning to do every day. So again, I thank you for all that you do. And I'm just very much looking forward to engaging with you on questions, talking about the topics of the day. And as Dean Benoit said, hopefully, in the not too distant future, see you guys all in person. Because I do know the good news right now is, look, the light is absolutely getting brighter at the end of the tunnel. We will get through this. We will persevere soon enough and continue on the way we always do. So thank you and look forward to your questions.
Thank you, Mr. Minaya. Prior to today's event, we asked students, faculty, staff, and community members to submit questions to you. And now we will begin the Q&A part of our event. But before we get started, Mr. Minaya, would you explain what Nuveen does and describe the nature of its relationship with TIAA?
Sure. Probably easier to, why don't I start with TIAA, right? TIAA, as I said, is over a 100-year-old firm. It was started in 1918, and it was a concept of Andrew Carnegie. Andrew Carnegie at the time had many friends in academia. He was seeing professors retire into poverty. He saw it as a noble profession, felt that something needed to be done for it, and it was an important thing for society. And he endowed $1 million gift to create a retirement system that would provide the retirement needs for professors, and importantly, it'd be portable. So if they moved from one university to the other, they can move their retirement assets with them. Today, that is still the mission of our firm. It's at the core of it. But you fast forward and we're over $1 trillion in assets under management, very global firm. 60% of that still serves that core mission of campuses across the US. The other 40+%, serves the broader market, whether it's your traditional mutual funds, other corporate pension plans, sovereign wealth funds. And what Nuveen does, we are essentially the investment arm of TIAA. So we manage all that money on behalf of TIAA and its participants and other stakeholders and investors. I think we're a very unique firm because we're an asset owner and asset manager at the same time, right? So we manage our own money, which on behalf of participants, college professors. We also have a diversified business and growing asset management holistically. I think we're also unique in that of that scale, we're one of the few asset managers that is scaled both in your traditional asset classes, so stocks, your traditional stocks and bonds, but also in alternatives, right? So, because we believe diversification is very important. So we own and manage around 300 billion in assets in alternatives, and that's things like office buildings, retail, multifamily residences, whether it's in China, Brazil, the US, globally. We're the largest farmland owner in the world. We own vineyards, almond orchards. We invest in toll roads, bridges. And again, that's unique because, again, the world is moving more towards trying to find better diversification. And these are one of the things that really makes us unique in what we can bring to our participants. And I think it's also why over the course of 100 years, or 100+ years, we've lived through Great Depressions, multiple wars, global financial crisis, what we're dealing with now. Through that whole time, we've maintained the highest ratings given by the rating agencies, and we've maintained that promise back to our participants. And I think it's because of the whole collective of who we are and how we do it.
Wonderful, thank you. Our first submitted question comes from Olivia Guillebeau.
Good morning, and thank you for being here, Mr. Manaya.
Good morning.
My name's Olivia Guillebeau, and I am an equity analyst for the Bowden Investment Group. And I would love to know, with all of the uncertainty in the world today, what's your current outlook for the markets?
Interesting enough, I will tell you, it's not that much different from pre-COVID, right? As we entered the year, look, there's a few things that we were very convicted about, right? We knew that what was the largest global expansion, economic expansion in the history of our financial markets was really coming to an end, right? And the fact that the next 10 years were going to bring lower returns than the previous 10 years. The fact that volatility was now going to be present in investors' lives more than it was over the previous 10 years. Geopolitical risks, uncertainties were going to persist. And then, of course, interest rates were going to be lower for longer and pressuring again from a retirement perspective. So these things we knew, and it was more around barbelling our portfolios, leaning into diversification. Now, COVID comes in, and all it's done is accelerated those particular issues, right? And now we know that volatility is likely going to be even more pronounced. Interest rates are going to be lower for even longer. But ultimately, what's really driving the point for us going forward is I see a market that's going to, look, we get through this, even though there'll be some volatility and some bumps in the road. What's important is the fundamentals. What's important is going back to diversification, right? Because it's one thing that was, we all talk about what I would call finance 101 of portfolio construction. And yet a lot of that didn't matter much when you just had a bull market that was going up, right? It didn't matter whether you were 80-20 equities, bonds, or a different allocation. The reality is all markets were going up. And, that need for diversification, that need to kind of think about fundamentals, somewhat muted. But today, I think it's a lot more important. And I think about, often I'm asked what keeps me up at night. I would say it's that we blink, right? Because I've either, some ways I could say, fortunate enough to have had the experience of lived through several crises now, whether it was the telecom bust, it was the tech boom and bust, the global financial crisis, obviously what we're dealing with now. And in every single of these cases, you get close to blinking and saying, there's something we need to do in an abrupt manner. Now, I'll give you the example of, the election in 2016. Financial markets as a whole were convinced of two things, that it was extremely unlikely for a Trump win. And by the way, if that did happen, then the markets would go down significantly. And usually what happens in those environments, we're all writing memos and we're all saying, here's what we would do. By the way, this will never happen. But if it did, here are the different things that we would do. And of course, it did happen. And you get to that point, we say, oh, wow, do we need to do something? And we were able to pause and say, well, look, it's about cash flows. It's about security selection. It's about the long term. Let's kind of stick to what we always know in our knitting. Same thing happened when Brexit came. And we were like, not a chance this will happen. But if it did, here's how we think markets would behave, and here are things we can do. And of course, the opposite happened on both ends. But what's always served us well is throughout all this volatility, and I would say, and even with the news we're dealing with today, which, I pray and I wish good health to our president and our first lady. But even through that, or whatever happens in the election this year, it's really about the long term in maintaining diversification. So yes, there'll be more volatility. We'll see a lower interest rate, which will be a strain for retirees. But ultimately, over the long run, maintaining discipline, I feel pretty optimistic.
Wonderful, thank you. Our next question comes from Christian Garnier.
Hey, how are you doing, Mr. Minaya? My name is Christian Garnier. First of all, thank you so much for taking the time to speak with us. I'm a marketing major and I'm the president of the Association of Student Entrepreneurs. I just wanted to ask you, are you optimistic about the future of the asset management industry?
By the way, I love the guitars on in the background there in the mic. I'm sure there's a theme. There's a theme developing there, but we won't get into it on this call. So the question around the future of asset management. Look, I am cautiously optimistic about the future of asset management, and very similar theme to what I said with kind of the market outlook. I have the same outlook for asset management we did pre-COVID, right? Pre-COVID, the asset management industry had several headwinds, right? One being fee pressures. What you've seen a tremendous move from actively managed funds to passively managed funds, right? Your actively managed funds typically charge higher fees. Your passively managed funds, like index funds, are much more lower fees. In some cases, go into zero fees. That puts tremendous pressure on the P&Ls of asset managers. You also have a higher regulatory environment, and that also puts obviously pressure from rising costs. So scale is becoming very important. But I see about 6 kind of big trends happening in asset management. One is scale, right? You're going to see a lot more M&A happening because it's a lot harder for the smaller firms, the niche firms, to kind of deal with these dynamics. And firms are going to have to learn to become a lot more efficient, and you'll see a lot more consolidation. I think the second thing is technology and artificial intelligence. And I think this is a big one. I don't know whether it's 5 months from now or 5 years from now, but clearly this is going to completely transform the industry. There's a lot of my peers today in large asset management firms that even consider themselves not an asset management firm, but a technology firm, right? So how money is managed, where we look for alpha, is going to definitely be a game changer. Another one is alternatives, right? It's growing in demand. You're seeing a lot more asset managers saying, we need these capabilities, as I mentioned earlier, to provide protection to our investors. There's high barriers to entry in that you're also seeing acquisition there. You're seeing more of those capabilities being developed. Fourth, I think it's technology, but now in the distribution side. The other big thing in our industry is, sales typically happen the old-fashioned way. People walking in with a briefcase, pounding the pavement, pressing the flesh, knocking on doors. Today, it's more about how do you do that digitally? Again, how do you get more efficient? Also, how to use that technology to better understand your clients, right? I know it's controversial, but obviously the Facebooks of the world, the Googles of the world do that very well with kind of the use of data. I think the asset management industry is trying to do the same thing, right? Maybe not in the same kind of scale, but again, how do we better understand what our clients want in a much more efficient and dynamic way? I think the fifth one would be lifetime income. We saw the Secure Act being passed this past year that allows for an annuity or some kind of fixed income component inside of a retirement account or 401k. That's huge because look, most people are not sophisticated enough to manage their own money or know where I should go or just be able to kind of set it and forget it. I think introducing that more into the retirement community is key because we have a melting iceberg here. I mean, it's pretty dire situation in our country today from a retirement perspective. And the last one is responsible investing, ESG or environmental social governance issues. This is probably the most talked about thing in my industry today. And the dialogue has changed dramatically from one of, well, just give me some products so that I can invest the way I want, to managers being challenged by clients and stakeholders and others on what we're doing about it and how we're investing our portfolios. And that is one that's also going to be a pretty big game changer. And that's why you're seeing so much of it, whether it's in commercials, whether it's how firms are talking about it. They didn't wake up yesterday. This is the push-pull from stakeholders and clients alike.
Thank you. The next question comes from Dr. Brandy Hadley.
Good morning, Mr. Minaya. Thank you for being with us here today. Yes, I'm Dr. Brandy Hadley, an assistant professor in the Finance, Banking, and Insurance Department. And you mentioned responsible investing. What is responsible investing? How do you define it? And do you see it as something more than just marketing hype or spin? You mentioned the coverage in the commercials quite a bit recently.
Sure, and look, I think it is a lot more than marketing and spin. It's become a reality. So maybe I can dig a little bit deeper as to what that dialogue's been, right? And when we say spin, the term often used in the sector is greenwashing, right? But again, why is there a need to greenwash or throw spin? This is a massive pull and push from our individual clients. It was, I think just a couple of weeks ago, it was the 50-year anniversary of Milton Friedman's famous essay in the New York Times Magazine. And that's been hotly debated to this day, right? And it was this view that the only social responsibility of a corporation is to increase the profits of its shareholders. And even as I was coming out of school, it was something I also very much believed in. It's a lot trickier today. The two are connected. I view these things as bottom line issues. I look at it from a capitalist view of, hey, this is driving our bottom line. The discussion before was one of saying, okay, I don't want to invest in sin stocks, so I will create a separate product for you, of which, look, we manage over 30 billion in these types of screen products because clients wanted them. But then there was a view that because you're doing that, you're going to get lower returns. And again, it is a very academic thing in the efficiency frontier. If you if you put a constraint to a model, you should expect lower returns. And that's a view that exists when you think about ESG. And by the way, it's harder to manage, so it's going to be higher fees. That's completely changed today, where it's one more around how do you look at these risk factors in your portfolio, right? We see this today in our own portfolios of looking and saying, okay, we own property in Florida. Water levels are rising. The costs of managing those buildings are rising as well. It's impacting the returns of our investment. We did a lot of work on PG&E and kind of how we incorporate, risk factors in the investment process and realized they scored poorly on the environmental side. Well, we saw what happened with fires, and then we also saw what happened to their stock price and the levels of their bonds. So these are things that if you do not take account to them, they are going to hurt your returns. We've got 90% of our AUM today uses ESG in their investment process. we will hit a goal by the end of the year that it's 100%. And the way we define this is in 4 quadrants, right? One is, again, the investment side. I view this as a way of driving alpha. Using the tools, understanding these risks is going to improve our returns. The second one is engagement, right? So we vote over, last year, we did almost 15,000 proxies, 100,000 meetings and agenda items. It's how we engage. It's not about exiting. It's not about divesting. It's how we exert our views on what's going to make that firm better so that they can drive value for us. And it's engagement, it's transparency, it's showing why we vote these proxies, how we vote them, and where we stand for them. Third one is impact measurement. And this one's a hard one because I think it's pretty nascent today, but we're teaming up in fintech companies and others to say, how do we understand this? Again, not just because it's a social good. Yes, that's important. It's going to, we think about we're all long-term investors. These things all impact your bottom line. And then the last one is thought leadership and products. And that's another area where we continue to innovate to bring this topic to our participants and to our investors.
Thank you. Our next question comes from Michael Odom.
Good morning, Mr. Minaya. Thank you for being with us again today. My name is Michael Odom. I'm Director of Development for Sustainability here at Appalachian State. And as a follow-up on Dr. Hadley's question, can you share how sustainable investing fits into your approach to responsible investing and give a few examples of specifically what you were doing as a company? Thank you.
Sure, I'll go back and say, look, I think it goes back to how I kind of look at the 4 quadrants, how we engage with firms, right? So the 2 most important pieces, I think, are, look, are we managing this from a risk perspective? That's our fiduciary duty for our people. 2 is our engagement model, right? Because a lot of times people will say, we'll get pressure, divest from XYZ stock or firm. And my viewpoint is, do you want the shareholders who are held to a high scrutiny to exit? It'll still be in private hands and will be a lot more looser without any restrictions. So I think engagement is a powerful model. Then the third piece, it's how we manage our assets, right? So I mentioned we're a very large farmland owner, the largest farmland owner on an institutional basis worldwide. It is in our vested interest that we make those assets very sustainable. I can tell you that, like, on the ground, we've gone into areas that we say, well, you can make water usage here for all the farmers a lot more efficient, and it'll reduce carbon emissions, so on and so forth. That's good for us because we go to a region. Our first thing is think about buying a house. You want everybody to be remodeling and improving their homes around you because it improves the value of your own portfolio, right? So it's looking at our real estate portfolio and having a target of reducing, emissions in our real estate portfolio by 30% over the next 10 or so years. Real estate's one of the biggest contributors to carbon. Again, yes, that's good for the world. It's also good for our own properties because it lowers, energy costs. And then the last piece here is it's what our clients want, right? So that when we have a LEED certified, which means kind of a very sustainable building, you get better rents because you get tenants that want to go there. So again, there's so much focus on these things that are about well, look, it's charity, or it's about, you can argue the politics of it all. I put that all aside. I'm like, my job is to make money for our participants and do that over the long term. These things hit your bottom line today.
Thank you. The next question comes from Dr. Marty Mesner.
Mr. Manaya, I'd like to emphasize how nice it is to have you kind of here today. This has been so long in the making. We were planning breakfasts with different student groups, getting you really involved face to face, and this is nice, but we need more. My question is a little bit of a follow-up on what's taken place so far. Through my career, there was a lot of talk about social investing, and a lot of it had to do with sustainability and the sin stocks and so forth. And I even dabbled in investing in things that I thought were good for society, and I think I did lose some money in that choice. But there are things that are more important. Since the George Floyd became pretty much a household name, things even here in Boone have changed dramatically. I participated in my first Black Lives Matters protest here. And I am wondering if you could maybe help me understand if the same kind of principles that apply to environmentalism and so forth in investment apply also to things like diversity and inclusion and inequality and social justice, and corporate stances on those issues are part of what you would describe as responsible investing as well.
Sure, I'd love to touch on that. And yeah, I had a smile when you said the comment on kind of hear, because you sounded like my wife. She says the same thing sometimes. She's like, well, you could kind of hear when I'm talking, but you're not. No, but I'd say, look, it absolutely all ties together. And it's the same philosophy around the ethos of all of us in our firms is, you know, it's our fiduciary duties, but it's our stakeholders, it's our employees, it's how all that comes together. You know, I look at this two ways, and, you know, one, it's, again, that whole bottom line focus. The first issue here in when you think about diversity and inclusion, it's as simple as the demographics we see in front of us, right? You know, I look at, you know, in the communities of color, for example, you know, less than 20% access to retirement accounts, which is an important thing in order to build wealth. You know, that would help society in terms of wealth growing and having a larger middle class. But also as a maker of financial products, it's a massive cohort. As a TIAA Nuveen, I would love to kind of lift this group, and it'd be great economics for us as well. I think we've become a much more global economy and very fast and highly connected. I've seen it firsthand as we first started opening an office in Brazil, in Hong Kong and Singapore. While you brought professionals that were on the ground and spoke very good English, you kind of realized when you try to manage these businesses sitting from New York or Charlotte, North Carolina, there was something lost in translation. You know, we were not trained to think that way. We did not have in leadership the right different diversity of thought. I've seen that firsthand really lead us to make some pretty big mistakes in what we do. I still remember even, you know, being a lot more junior at TIAA, and they came out with a campaign that showed Spanish, you know, translated the material into Spanish. When I read it, I said, wow, this translates from a dictionary, but they have no idea that in the Spanish community, this does not mean what they think it means, right? So there's a great example of, look, if you had more diversity, somebody would have told you, hey, you're spending millions and millions of dollars on an advertising that really isn't going to hit home, right? And that, to me, it's just the basics, right? Like, who are your clients? Like, who do you live? Like, it's the basis of how you would run any business. I think then the other piece is, you know, the inequalities, right? And I think, look, I've never been more optimistic in my life than I am right now, because what I've seen is tremendous awareness. And one of the things that we've done, we've held these, you know, courageous conversations, we call them, and the empowerment of just people understanding the story of other folks and what it really means to be in their shoes. You know, one of the most important human characteristics is empathy, right? And kind of how do we look at it from that perspective? I can call myself out as a leader that when the George Floyd situation first happened, look, throughout my life, it's like I've had my own journey, my own experiences, but that's not something I ever really wanted to talk about or engage. And when it first came out, my view was, I don't know, that's not really for me to get on a pulpit and talk about. And I didn't realize how wrong I was, and obviously quickly was convinced to change my mind. And what I saw was leaders talking about their experiences in ways that you had never seen before. And then people saying, I had no idea, you know, these different experiences. That just makes us better people. And it helps us manage our people better. It helps us understand who our clients are better, you know, who our clients are and what they want. So to me, you know, I am thrilled to see more awareness. And this is not, you know, earlier you said there were other things that you might have said, oh, I lost some money, but, you know, there are other things of mine. No, the two are tied together. You know, we have to, if we're going to manage these things, we can't do it and say, well, you'll lose some money, but it's for a greater good. All these things, if they're not tied together, they're not going to really foster. I often say, I do believe there is no other better system on the planet than capitalism to pull poor people out of poverty. Yes, it's failed in some ways and that you get massive inequalities. History has repeated itself over and over. If you go back to Roman times, when that starts happening, you're going to have issues. And we have issues today, and they're bubbling up. But it's more around addressing this and say, this is for the greater good. It's also, it helps the bottom line. It just makes perfect sense.
Thank you. The next question comes from Isabella Riley.
Hi, thank you so much for being here, and thank you to the College of Business for organizing and putting this event on. My name is Isabella Riley. I am a second-year junior majoring in marketing, and today I'm representing Enactus and Phi Beta Lambda. My question for you is, what are some examples of initiatives within your firm to expand and support diversity and inclusion?
Thank you for that question. Look, I think, diversity and inclusion is at the DNA of our firm. As I mentioned, the history of it. Again, we're a private firm, but we're really owned by all the college professors that you see across campus. So if you've ever engaged with the professors on campus, they feel pretty strongly about a lot of issues. So it kind of spills over to the DNA of who we are. So that's always been the case. I think, I could talk about our numbers and say, almost 20% of our investment professionals, portfolio managers, are women. That's like twice the industry average. I think we stack up well there. But to me, it's always kind of you fail if you're just looking at the numbers, right? To me, it's if you say, okay, I feel great that we're at 20%, that women investment managers, and that's much better than the industry. That makes you complacent, right? Is that the right number? It's really more around what's the process we're doing? How aggressive are we in the talent acquisition side? Something you hear often, and I hear often, is we'll be searching for a few roles, and we'll come back and we're like, wow, there's not a single woman or person of color out of 40 people that we hired. And the answer would be like, well, we just couldn't find any, and the pool is pretty thin. Well, that's not true. The pool is actually pretty deep, and you see other firms do very well at it. And those firms, by the way, you could do the studies, also do much better from a value creation perspective. Their stock prices are higher. Their profitability is better. So you have to create an environment where you're attracting top talent. You have to know where to find it, but that talent also has to want to be with you. So for us, we do different things like, again, we're constantly stressing the hiring process. We've formed employee resource groups to empower employees to have a voice and a direct line to the C-suite at our firm to kind of let us know, hey, here's what we're seeing within this particular representative group inside of our firm. We have a diversity and inclusion council and committee by senior people, diverse people as well, that again are being held accountable to bringing these issues. So it's not any one thing. I go back to, it's the ethos of it. It's how you hold yourself accountable to these things, and it's how you really drive the culture of any organization, whether that's a sorority, academic institution, or a corporation.
Thank you. Mr. Minaya, I'm going to be asking the next question on behalf of J.T. Warren, who is a member of our Holland Fellows group. I know that there are going to be lots of questions regarding COVID-19 and how you've been able to maneuver the pandemic, but in what ways do you see the industry changing in light of the pandemic? What are some strategies that you've been able to adopt and make work overseas and work in general more streamlined? And how do you see the industry and work that you do change when life returns to some sort of a normal?
Sure, it's a great question. I think, this is one of these things, and there's been a lot of things I've been very surprised coming in and out, and hopefully out of COVID. The biggest thing has been in how we engage with each other, right? So we all knew that we had to be more digital, and the world was going that way. Again, COVID in many ways, as I've said, this theme of it's accelerated a lot of these issues. We were one of the first firms to, start communicating and putting content on how COVID was going to impact financial markets and portfolios. We immediately went to an ethos of okay, the most important thing here now is how do we communicate with our clients and our people? Amazingly, this year, we've had the highest client engagement in the history of our firm. We've never had as many client meetings. We've never had as many clients going to our website and clicking our content, right? So it opens your eyes to, you know, how do we use the technology? We had, in my world, when before people give you money, they do a lot of due diligence. And we had a lot of these meetings that were at the last leg, and now people couldn't travel. We found ways to do virtual tours of assets that we were looking at. We found ways to kind of bring people together, whether it's on Zoom or otherwise. And for sure, it's kind of changed the theme of like where we think we come out at the other end of this, right? Because I'm a big believer, by the way, that there was a lot of noise before around like firms saying, we'll never come back to the office. That is not true, in my opinion. The office market is not dead. I think as human beings, we crave interaction. I think it's very important to have folks that kind of come to an office environment. But there also has been an understanding of the flexibility that could be used and needed. I think the way people go in the office, I think the way offices are laid out is going to change. I travel a lot. I used to travel a lot for my job, over 200,000 miles a year. It wasn't unusual for me to go make a trip to Seoul, Korea for a 45-minute meeting. You know, I don't think I'm going to be doing that going forward. I think there'll be an appreciation that we can do this over Zoom versus going halfway around the world for a 45-minute because there's a viewpoint of we need to absolutely see each other for everything that we do. So I think it's this balancing act of the human interaction of being present and in person. That's going to be needed. I actually think it's extremely important. But understanding the flexibility around that and how technology is now going to catch up, right? It's interesting. I think we were talking earlier before we kicked off that in the last 5 months, you know, it would have taken 5 years for the technology that we've kind of caught up with in 5 months. And it's not just work, it's our own home lives. People have upgraded their cameras. They've worried more about getting better broadband and internet. It's been a massive wave. So there are a lot of silver linings, and I do think how we work and live has been changed forever. And I would say it will change forever in the positive. It's an evolution.
Thank you. Mr. Minaya, our final question comes from Jennifer Coffey.
Good morning. Thank you for taking the time to share your valuable perspectives with us this morning. My name is Jennifer Coffey, and I have the honor and privilege of serving Appalachian's military-affiliated students as Program Director of Student Veteran Services. In that vein, what advice would you give student veterans as they prepare to graduate and enter the civilian workforce?
You know, I think it's such an important thing. I mean, for me, it's something near and dear to my heart. I kind of championed, you know, veterans at my firm. I went to the United States Marine Corps Officer Candidate School. So, you know, something that's very, very near and important to me. And that's been another area where it's kind of changed dramatically. It was something that, you know, if you were a veteran before, you almost didn't try to say that you were one because it came with different stigmas. You know, today I think the world's embracing veterans a lot, and what they bring to the table is also being massively appreciated, right? It's I think those students knowing, look, you're going to be welcomed. Don't shy away from kind of what the things you learned in the military, which is a very unique experience. And it's important to be able to project what that experience brings to the table. Because I'll give you an example. When I was kind of overlooking this at TIAA, there's an incredible intent to help that cohort or that community. That being said, just like other cohorts, there's a lot of lack of understanding. I remember finding out that our veterans, when they went to do reserve duty, were docked vacation days. And, you know, when I brought that up to the head of HR and Roger, they were like, what? Again, it just wasn't known. It was kind of caught in a bureaucracy. Like, I think within 10 minutes, it was like, we're fixing this right away. When I looked and said, oh, we are trying to find, you know, veterans to hire, yet I said, well, show me the job descriptions, show me what you're looking at. And I'm like, oh, wow, you don't understand that, you know, these MOSs do translate in many different ways. But if you're trying to find someone who's going to work at a call center and because they don't have specific experience in the traditional sense, you're going to be hurt. So the firm put together an MOS translator so that you could kind of better understand how these things come in. But these things take effort, right? Again, this is what I mean by inclusion. It does take effort. You could even have the best intent out there, but not the tools in which to implement that intent. So I think that's one of the challenges and opportunities for veterans, right? It's, hey, the civilian world is not going to fully appreciate and understand what you did in your in the military world. And helping that connectivity is, I think, it goes a long way in improving kind of our diversity as it relates to veterans.
Thank you. I'm pleased to announce that in honor of Mr. Manaya's passion for student veterans and in appreciation for his taking time to speak with us, Mr. Edward Boyles is making a donation from the Boyles Lecture Series Endowment Fund to Appalachian's Veterans Student Association. Thank you, Mr. Boyles, for your generosity. Mr. Minaya, typically at this point in the lecture, I would ask you to join me at the podium, but seeing as we are not able to do so today, please accept virtually this crystal eagle as a token of our appreciation for your being a part of the Boyles Lecture Series.
Thank you very much. I appreciate that. And again, I enjoyed this very much. I do look forward doing this at some point on campus and meeting you all face to face. You know, I'm passionate about what we do. I have one of the best jobs in the world because of who we are and who we serve. You know, it's great that I'm like, hey, if I do my job well, people get to retire with dignity. And it's just a great thing, and being able to engage you all, and especially directly the people that I serve. I just thank you for all that you do. And I continue to thank you for your confidence and trust in our organization.
Well, we are really pleased to be able to present you with this American Eagle. The eagle symbolizes strength, gracefulness, keenness of vision, power of flight. Mr. Manaya, your passion clearly comes through, and certainly you possess those characteristics. So thank you again so much for all you're doing and for being here. It's our honor and pleasure to have had you here, and I can't thank you enough for that. Thank you all for being with us today for the Boyles Lecture. I hope you enjoyed the speaker as much as I did, and I hope that once this pandemic ends, again, Mr. Manaya, we welcome you to join us on campus face to face, hopefully in the not too distant future. Most of all, everyone, I hope you are inspired to make change and be leaders within our communities. So thank you, everyone, again, and have a wonderful day and a wonderful weekend.
We make sure we do it over football season.
Thank you so much.
Thank you.
Very much appreciated it.